Hi, I'm Danny Ecker with your Chicago Business Today midday report. Groupon stock took a nosedive in after-hours trading Wednesday following its fourth quarter earnings report. Now back to trading at just under $5 a share and erasing much of the surge it had made over the past 3 months. The main reason appears to be lower than expected revenue projections for this quarter, with a series of other disappointing reports piling on. Joining me now with more on the latest numbers from the Daily Deal Giant is our John Pletz. John, what was your most interesting takeaway from this latest earnings report? What stood out?
It was probably Groupon's core business. Their new business of merchandise actually brought in more revenue in North America, their home market, in the fourth quarter than they did from the traditional local deal business.
And that's got to be, that's the first time that's happened, right?
Right. So that never happened before, but it's also troubling for Groupon because there's so much lower profit margins in that business than the core business. I mean, you're talking less than 10% profit margin in merchandise versus maybe 10 or 20% or 30% on daily deals.
Right. So sort of a question of where's their target. The question that's sort of been around for Groupon for quite a while, at least since the IPO, is the cost cutting and what kind of cost cutting they can do to lower those operating costs. What did you learn from this report?
Well, they're certainly having some success there. You're seeing the marketing spending come way down, and you're also seeing the number of users hold steady or even grow. So they've answered that question, but they've still got a lot of costs to whack. One of the big problems for them right now is internationally. They have 4 times as many salespeople overseas as they do in the United States. They get twice as much productivity out of the folks here as they do overseas. Ultimately, they've got to get that cost structure down. The challenge, however, is you can't service all of the countries that they serve outside of the U.S. from one call center the way they do in Chicago.
It's quite an empire that Andrew Mason has built at this point. And as far as what Mason is really looking at, I mean, he offered a few thoughts here in this latest report. What did he have to say as far as what he's predicting for profitability for Groupon moving forward?
Essentially, it's trust us. And what they're saying is that eventually they're going to get to a new platform which is creating this marketplace as opposed to relying on just emailing you a daily deal, and that they won't have to make the level of investment they're making now, and ultimately the profits will come.
He's just asking for a lot of patience at this point with investors and everyone.
Exactly.
All right, John, thanks a lot.
You're welcome.